Hello traders, Gary Wagner here, just before 10:30 in Honolulu, 4:30 in New York on Monday, May 16th, 2016, and we are looking at the Dow Jones Industrial Average up in triple digits after being down in triple digits, pretty much gaining back any of the ground lost on Friday. We are at 17,710, putting it up about 175 points on the day, or a full percent rise on the day. Now, just shy of that, 0.94% in the S&Ps, up almost 20 points, 19.25 at 2062.75. Let's take a look at our first Standard & Poor's chart. Interesting start to the week, not only in the precious metals as we just spoke about, but in the Standard & Poor's and oil. We'll take a look at oil. Oil tracking higher on the day, and the same with the Standard & Poor's. It does appear we've got settlement at 2061.25, up about 17.75 points. Now, what I am really taking a hard look at is I expected this morning, or I should say this week, to have lower prices in equities. We had some fairly dismal data come out of China overseas last night, and yet the Chinese equities markets did very well. That spilled over into the European markets. They also did well, and that spilled over into our markets with this nice substantial gain of almost a full percentage point, 0.87% in the Standard & Poor's 500. Now, the one thing that we talked about was the fact that on Friday we broke below this 50-day moving average. That's pretty significant. And the key, of course, is the fact that when it crosses below this, the next real level that we'll look at, of course, has got to be a 200-day moving average. Now, this all coming in the light of the fact that we had this golden cross. A golden cross is simply where the short-term 50-day moving average crosses above our longer-term, the 200-day moving average, and this, of course, occurred mid-month last month. But interestingly enough, if we kind of move this line straight up, since that point of getting this golden cross, we have seen nothing but a decline in market price and market sentiment, followed by a short little clip up, and then, of course, today's action back above the 50-day moving average. I really believe that this is the critical price point that we need to look at to determine a future strength or weakness in U.S. equities markets. And in as much as I had contemplated us putting a short position on in the market, we certainly didn't get that kind of follow through today. We saw no underlying weakness in the market. We'll have to see what develops over the next week. So traders, one of the things that we have been talking about all throughout last week and the week before was the fact that we saw a disconnect or a negative correlation between U.S. equities and crude oil. Now, we had crude oil move substantially higher today. That's this chart on the top. You can see this move up almost 4%, 3.5% higher to close at $47.85 a barrel, up $1.64 per barrel. Quite a move. Now, when we look at that in terms of the Standard & Poor's 500, that was up almost a full percent, 4% gain in oil. So at least for the day, we have an absolutely positive correlation between crude oil and U.S. equities. So traders, as you know, I am on record under the belief that we would have seen crude oil find some sort of a ceiling or major resistance at between, call it $45 and $46 a barrel. We're up closer to $48 a barrel. So we can absolutely say that that level I was looking at, which was based on a couple of tops right in the market. This is a monthly chart, so it's going to be harder to find the tops than it would in our weekly, which is where we pulled it. But this is kind of what I was looking at, was a series of tops that we had in the market. Market comes down, we make this high up here. Now, this is 52 here. And here's the thing, on a monthly basis, over the last 1, 2, 3, 4 months, we have seen crude oil, which hit a definitive bottom at $26 per barrel, move up. Sizable move, of course, in February, March, and April so far. We have seen tremendous moves to the upside, and now we've got the market, which I believe if we're going to see any kind of resistance, this is the area it has to come into, because you've got these series of bottoms on a monthly basis. If it does make it over this top, you really have to look at these highs up here, but we'll see how oil reacts, but I think that we have some technical evidence that should be supportive of finding resistance in this area. And traders, lastly, I do want to take a look at the dollar. Dollar in essence unchanged. You're looking at a daily chart, dollar index. You can see this absolute doji line that has come in. Typically will signal either consolidation or a key reversal. We'll have to see what happens, but we had a tremendous rise from 92 up to the market trading mid 94s, comes below 94 again, and now is trading above it at 94.55. And we'll have to see if the market has the ability to hold this level and move higher. We do have some major resistance that comes in at 95 on the dollar index. And as I said, we'll see how this market wants to unfold this week. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.